Now, Devdas Limited issued 10,000 equity shares of 10 each at a premium of 10%, and this is the breakup of the money. Then there were 4 shareholders, some of whom actually paid the money in advance, some paid in arrears, for some, they did not pay at all, so the shares were forfeited. All those details are given here. This is a case of oversubscription. 10,000 shares is the issue size, and the applications were received for 16,000. And then there is a reissue of forfeited shares. So we have to pass the journal entries for this company. Here basically in such kind of questions, your working note also is crucial because, all the working will have to be shown in working note, and accordingly the journal entries will have to be passed. So make sure that, you don't make mistakes in working note. Okay, so applications were received for 16,000 shares and your application money is 3 per share. So 48,000 rupees received. So bank account debit to equity share application account, 48,000 rupees. Then here you will now do a breakup. So this is the breakup of your face value, 10 rupees, how this is collected. The premium is 10%, which is 10% of 10 rupees. It is always percentage of face value. So 1 rupee, and this is included in allotment. So your allotment total money was 5 rupees. So 1 is premium. So obviously remaining 4 will be face value. So this is the breakup per share. Applications were received for 16,000, and then the question says that 3,000 applications were rejected. So out of 16,000, 3,000 are rejected. That means for remaining 13,000, 10,000 shares are issued on pro rata basis. So here once you get this breakup, now your next journal entry will be ready. So now equity share application money account will have to be closed. So debit 48,000, then 3,000 are refunded. So 3,000 into 3 rupees per application. So that is 9,000 rupees. That is to bank account. Then to 13,000 share applicants, to the applicants of 13,000 shares, 10,000 shares are allotted. That means 3,000 is the number of shares on which excess application money is paid. So that will be adjusted against allotment. So 3,000 again into 3 rupees, so 9,000. So and the remaining, the issue size, which is 10,000 multiplied by the application money 3. So 30,000 will be transferred to equity share capital. So this is your second entry for distributing the money out of equity share application. Now the next stage is allotment, and allotment will be in this case equal to the issue size. So 10,000 multiplied by the allotment money due is 5 rupees including premium. Out of that 1 rupee securities premium. So 10,000 into 5, equity share allotment 50,000. Face value out of that is 4 rupees. So 10,000 into 4, 40,000, and 1 rupee is security premium. So 1 rupee into 10,000. So 10,000 rupees is the securities premium. Now before you proceed to the next entry, let us do shareholder wise working based on the information that they have given. So there are A, B, C and D, 4 shareholders, and the remaining will be in others category. So this is total. So if you see the question, A who had applied for 1,820 shares. So A applied for 1,820 shares. That means he is allotted how many shares? It will be in the ratio of 13,000 is to 10,000, right? Because that is a pro rata allotment. So that means the number of shares allotted to him will be 1,820 in that same ratio divided by 13 into 10. So 1,400 shares are allotted to him. That means the excess shares for which he made the application was 1,820 minus 1,400, that is 420. B was allotted 300 shares. So this is the number of shares allotted. So be careful about the language. So 300 is allotted. That means the applications were 300 into 13 divided by 10. So 390 shares were applied for by him. Correct? So that means 90 were excess shares applied. Same thing you will do for C and D. And the total shares allotted are 10,000. So 10,000 minus these many shares of 4 shareholders will be in others category. That is other shareholders. And the pro rata allotment was done to the applicants of 13,000 shares. So 13,000 minus these 4 will be in others category. So this is a balancing figure. So these are basically the excess shares applied for. So that means if these shares are excess applied for, that means the amount which was paid in excess was these shares multiplied by 3, because application money is 3 rupees per share. So 420 into 3, 90 into 3, like that, this is your application money which is paid in excess. Now obviously this will be adjusted against allotment. Now allotment money due is how much? Allotment money due will be on the number of shares allotted. So 1,400 into 5, 300 into 5, 800 into 5, like that. So this is the money due on allotment, and this excess money which they have paid on application, that will be adjusted against these amounts. So that means the net amount which they are supposed to pay at the time of allotment will be 7,000 minus 1,260 by A, 1,500 minus 270, 4,000 minus 720, like that. So this is the net amount receivable on allotment. Now once you have worked this out, now let us go to the information in the question about the allotment. So they are saying A paid second call in advance at the time of first call. So it has got nothing to do with allotment. That means he has paid the entire allotment money. So that means this 5,740, which is net receivable from A, the company has received that. So 5,740 allotment money received. Then coming to B, who was allotted 300 shares, paid allotment money in arrears at the time of first call. That means at the time of allotment, he did not pay the allotment money. So here we are right now only talking about the allotment time, allotment stage. So this 1,230 which is receivable from B, he has not paid it. So that is why allotment money not received, 1,230. This is received at the time of first call. C did not pay allotment as well as first call. So that means in case of column C, 3,280 will be in allotment money not received. And then D, he did not pay the first and the last call. That means allotment money he paid. So for D, 4,100 will be allotment money received. Nothing is mentioned about others, so you will assume that others have paid the allotment money. So it will be in allotment money received. So now you know the total. Out of 41,000 net amount receivable on allotment, 36,490 is received and remaining 4,510 is not received. So now you can pass the journal entry. This will go to the bank. This will remain in call scenarios. So 36,490 in bank and 4,510 in call scenarios. And then share allotment account will be closed, 41,000. So if you see the share allotment money, share allotment account 50,000 was debited, excess application money was credited to allotment. So net balance was 41,000. That is 50,000 minus 9,000. So 41,000 net debit balance and now 41,000 net credit balance. So share allotment account is closed. Now after that the call money becoming due and the call amount due on first call is 2 rupees. And again the call money will be due on shares allotted. So 1,400 into 2, 300 into 2, like that you will calculate the first call. Now at the time of first call, what is happening is, again based on the information given in the question, A has paid the first call and he has also at the time of first call, he has paid the second call money in advance. Second call money is 1 rupee per share. So 1 rupee into 1,400. So 1,400 he has paid in advance. Similarly B, 600 he has paid. So that is the first call amount. And this 1,230 which was in arrears earlier, that also he has paid now. C has not paid the first call money. So that is why it will come in first call money not received. And D also has not paid the first call money. So again that will also be in first call not received. So now you have the breakup of 20,000. So first call money due 20,000, pass the entry for that due amount. So equity share first call account debit to equity share capital account 20,000. There is no premium on first call. And then now this 20,000 breakup will be 16,400 received. So that will go to the bank. Then 1,400 second call money received in advance. So this will go to calls in advance. This is arrears of allotment received now. Earlier you had debited in calls in arrears. So this will be credited to calls in arrears. And 3,600 is not received now. So this will be debited in calls in arrears. So now if you see calls in arrears, this is credit, this is debit. That means the net debit in calls in arrears will be this minus 2,370. So now you can pass the entry bank debit 16,400. Calls in arrears net debit 2,370. This will be calls in advance credit 1,400. Now the thing is this 16,400 which is received now, then second call money received in advance and the last time's arrears. All these three will go in bank account. So the sum of these three 19,030 will go in bank. The net debit 2,370 which we talked about earlier, 2,370 that will go in debit calls in arrears. Then your equity share first call account will have to get closed. So share first call account credit 20,000 and then this second call money which is received in advance, that will be your liability. So that will go in calls in advance account. So calls in advance account 1,400. Again just make sure that your debit and credit both are tallying. So 21,400, 21,400. Now what they are saying is after the first call, some of the shares are forfeited. C who was holding 800 shares did not pay the allotment and first call amount and his shares were forfeited after the first call. So that means 800 shares forfeiture entry you will pass. Now on these 800 shares of C, how much face value is called up? This much. So 800 into 9, that is 7,200 is basically called up. So which will be reversed from your equity share capital account. Then because he has not paid the allotment money, that means premium money he has not paid because premium was applicable on allotment. So premium amount is 1 rupee per share. So 800 into 1. This will be reversed from your securities premium. If he had paid the securities premium, then we would not have reversed this amount from the securities premium. Then how much amount is in arrears on these 800 shares? So for this, this information is useful. If you see, for C, he has not paid 1,600 and he has not paid 3,200. So this plus this 4,880, this is calls in arrears, which will be now reversed because now the shares are getting forfeited. So 4,880 reversed from calls in arrears. And the remaining money which is received by him is to be transferred to shares forfeiture account. This also you can cross tally. How much amount he has received, how much face value he has paid, that will be basically going to share forfeiture. Now he has applied for 1040 shares and per application the amount was 3 rupees. So 1040 into 3, 3,120 rupees he paid, which will go to share forfeiture, 3,120. Now let us talk about the second call. Now what you need to remember is on the second call, the call will be made on the net amount of shares because 800 shares are forfeited. Now the call will be made on 10,000 minus 800 shares. Only on 9,200 shares you will make a call. So 9,200 into 1 rupee because second call amount is 1 rupee. So equity share second and final call account debit to equity share capital account 9,200. So let us go to the working. Second call, the number of shares allotted multiplied by 1 rupee. So 1,400, 300 for C. There will be no second call because the shares are already forfeited. So 1,000, 6,000 like that 9,200. Now as per the question given, A had already paid second call at the time of first call, right? So now he will obviously not pay. So the earlier advance will be adjusted now. Then B, he has paid the second call money. So 300 entirely received. D, out of 1,000, he has not paid any second call money. So that will be not received. And remaining have paid the second call. So now we know the breakup. The amount received is this 6,800. So that goes to the bank. So bank 6,800. Then the earlier calls in advance 1,400 is adjusted now because this is no more advance now. So calls in advance debit 1,400. Second call account will have to be closed. So 9,200 credit and calls in arrears if you see 1,000. That's the total, right? That goes in calls in arrears. Okay. So this is about the receiving the second call. Now after the second call, these shares are forfeited because he did not pay the first and second call. So these shares are 1,000. On 1,000 now entire 10 rupees face value is called up. So now your journal entry will be 1,000 into 10 will be debited in share capital. The amount which he has not paid, that will be reversed from calls in arrears. So the amount which he has not paid is 2,000 plus 1,000. So 3,000 first call and second call he has not paid. So that will be reversed from your calls in arrears. So calls in arrears reversed 3,000. Remaining money is paid by him 7,000. How this 7,000 is received, that also we can cross check. So 1,000 shares and the face value that he has paid is 3 plus 4, 7 rupees. So 1,000 into 7. So 7,000 will go to share forfeiture. So this is the share forfeiture entry. Now these shares of C and D which were forfeited earlier, some of the shares are reissued. Now how many shares are reissued, that is mentioned in the question. 700 shares are reissued at 8 rupees fully paid up. So 5,600 fully paid up. So your entry will be 5,600, obviously it will go to the bank account. 8 rupees fully paid up, that means remaining 2 rupees is the discount. So 2 rupees into 700, 1,400 will go to share forfeiture because this is the discount on reissue which goes to the share forfeiture. So 1,400 and the face value, that is 700 into 10, 7,000 goes to share capital. Now at the time of reissue you have to compute the profit on reissue. Now here what you need to remember is these 700 shares which are reissued, how many are of C and how many are of D. So here they have mentioned that these included 500 shares of C and 200 shares of D. So obviously the profit will be on these 500 shares of C and 200 shares of D. So let us calculate, do the working for 500 and 200. So we have 500 shares of C and 200 shares of D which are reissued. Now how do you calculate the profit on reissue? The formula is face value received per share minus the additional discount at the time of reissue is equal to the profit on reissue per share multiplied by the number of shares reissued. That gives you profit. So how much is the face value received per share? Let us go back to the working. C had paid application money on 1,040 shares, right? So 1,040 multiplied by 3 rupees application money. And finally, how many shares were allotted to him? 800. That means this money which he has paid ultimately is for 800 shares. That means per share he has paid 3.90. and the shares are fully paid up at 8 rupees, that means 2 rupees is the discount. That means the difference between the two, 1.90, is your profit. This multiplied by 500 shares, 950 is your profit. Now similarly, D, he paid application money and allotment money, and excess application money was adjusted against allotment. So basically on 1000 shares, he has paid the application and allotment money due. So that is 7 rupees. Correct? We are talking about only the face value. So 7 rupees face value received, 2 rupees additional discount. So 5 rupees is the profit, multiplied by 200 shares reissued, 1000 rupees profit. So your total profit on reissue is 1950. That will be transferred to capital reserve. So 1950, it will be taken out from shares forfeiture and transferred to capital reserve. So this is all about the journal entry for the profit on reissue. So hope you have understood all these journal entries.